My dear students, welcome back to our channel. In this video, I will be explaining the Bcom second semester subject Financial Accounting as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 5 first important short question is: what do you mean by non-profit organization? A non-profit organization is a group that works to help people or support a cause, not to earn profit for its owners. Its main goal is to do social good, like helping the poor, educating children, or protecting the environment. Unlike businesses, a non-profit doesn't share profits with anyone. Instead, it uses all the money it gets, from donations, grants, or membership fees, to achieve its mission. Example: imagine a charity school in India that teaches poor children for free. People donate money, and the school uses it to pay teachers, buy books, and run classes. The goal is not to make money but to help society. Non-profits must also keep proper accounts to show how they use the money, just like businesses, but the focus is on service, not profit. Easy tip to remember: no profit, only purpose. That's what a non-profit is all about. Next important short question is: to prepare receipts and payments account with the following information. Cash in hand 18,000. Subscriptions 25,000. Donations 16,000. Printing 3,000. Entrance fee 5,000. Interest receivable 2,000. Rent payable 1,000. Sundry expenses 6,000. What is a receipts and payments account? Think of it like a cash book. It shows cash received in and cash paid out during the year. It's like your monthly pocket money diary. It does not include credit items like rent payable or interest receivable. It starts with opening cash and ends with closing cash. Given data: item amount, cash in hand 18,000, subscriptions 25,000, donations 16,000, printing 3,000, entrance fee 5,000, interest receivable 2,000, rent payable 1,000, sundry expenses 6,000. Important tip: appear in receipts and payments. AC don't appear. Cash-based items, accrual-based items. Subscriptions, cash received, interest receivable, not received yet. Donations, cash received. Rent payable, not paid yet. Printing, paid. Entrance fee, received. Sundry expenses, paid. Step by step, prepare receipts and payments account. Format: it's like a T-shape account. Left side is equal to receipts, money in. Right side is equal to payments, money out. Receipts and payments account for the year. Receipts DR, payments CR. To cash in hand, opening balance 18,000 by printing 3,000. To subscriptions 25,000 by sundry expenses 6,000. To donations 16,000. To entrance fee 5,000. Total receipts 64,000. Total payments 9,000. Closing balance, cash in hand 55,000. Memory tip: SDEC is equal to subscriptions, donations, entrance fee, cash. These are main receipts. Expenses like printing and sundry go to payments. Summary: opening cash is equal to 18,000 rupees. Total receipts is equal to 64,000 rupees. Total payments is equal to 9,000 rupees. Closing cash is equal to 64,000 rupees to 9,000 rupees is equal to 55,000 rupees. Next important short question is: 3. Calculate the amount of subscriptions to be collected to income and expenditure account for the year ended 31st March 2018. Subscriptions received during 2018 rupees 14,000. Subscriptions receivable for the year 2018 5,000 rupees. Subscriptions of 2018 received in 2017 1,500 rupees. Subscriptions received in advance relating to 2019 1,000 rupees. Question goal. We need to calculate the amount of subscription income that should be shown in the income and expenditure account for the year ended 31st March 2018. Given data. Details amount Rs. Subscriptions received during 2018 14,000. Subscriptions receivable for 2018, not yet received 5,000. Subscriptions of 2018 received in 2017, last year, 1,500. Subscriptions received in advance for 2019, next year, 1,000. Step-by-step thinking. To find the correct income from subscriptions for 2018, we must include only the amount related to 2018. Let's adjust the given amount accordingly. Step 1. Start with actual cash received in 2018. Subscriptions received during 2018 is equal to 14,000 rupees. Step 2. Add subscriptions earned in 2018 but not yet received. These are due for 2018 is equal to 5,000 rupees. This is income earned in 2018, so we must add it. 14,000 rupees plus 5,000 rupees is equal to 19,000 rupees. Step 3. Add subscriptions of 2018 that were received in 2017. Last year we received 1,500 rupees in advance for 2018. This is also 2018 income, so we must add it. 19,000 rupees plus 1,500 rupees is equal to 20,500 rupees. Step 4. Subtract subscriptions received in 2018 that are for next year, 2019. Received 1,000 rupees in advance for 2019. This is not 2018's income, so we must subtract it. 20,500 rupees, 1,000 rupees is equal to 19,500 rupees. Final answer. Amount of subscriptions to be shown in income and expenditure account for the year ended 31st March 2018 is 19,500 rupees. Memory tip. Think of it like this. Real income is equal to what you got this year, plus what you earned but didn't get yet, plus what you already got last year for this year, what you got this year for next year. Formula. Subscription income is equal to received in current year, plus receivable of current year, plus received in previous year for current year, received in advance for next year. Next unit 5. Long questions. First important long question is: explain non-profit organization features. What is a non-profit organization, NPO? A non-profit organization, NPO, is a group or institution that works for social, cultural, educational, or charitable purposes, not to earn profit. Its main aim is to serve society, not to do business. Features of non-profit organizations. 1. Main aim is service, not profit. NPOs are formed to help others, not to earn income. Example, a school that gives free education to poor children. 2 examples include charitable trusts, hospitals, clubs, NGOs, religious institutions, 3. No distribution of profit. Even if the organization earns extra money, called surplus, it is used for the same purpose, like improving services. Surplus is not given to members. 4. Maintains special accounts. They don't prepare profit and loss account. Instead, they prepare 1. Receipts and payments account, cash-based. 2. Income and expenditure account, accrual-based. 3. Balance sheet, to show financial position. 5. Managed by trustees or committee. NPOs are run by a managing committee or board of trustees. These people work for honor, not for salary. 6. Registered under Societies Trust Acts. In India, NPOs are usually registered under the Societies Registration Act or Indian Trusts Act. 7. Sources of income. They get money from donations, grants, membership fees, subscriptions, fundraising events. Easy way to remember, simple D. Letter stands for S. Service-based. I. Income from donations. M. Managed by trustees. P. Profit not shared. L. Legal registration. E. Expenses for mission. D. Different accounts. Example to understand. Imagine Smile Foundation, a real Indian NPO that works to educate poor children. They don't sell anything. People donate money, and Smile Foundation uses it to run schools. Their aim? Not to make money, but to make India smile. Next important long question is: 2. The following is the receipts and payments account of Healthcare Hospital for the year ended on 31st March 2018. Receipts amount. Hours payments amount. Rupees. To balance BD 5,600 by paid for medicines 24,000. To subscription 45,600 by salaries 22,000. To donations 11,600 by sundry expenses 400. To charity show 8,000 by equipment 12,000. By charity show 800. By honorarium 8,000. By balance CD 3,600. 70,800 70,800. Additional information. Particulars 1st April 2017. Hours 31st March 2018. Rupees. Subscription due 1,000 2,000. Stock of medicine 8,000 6,000. Value of building 80,000 72,000. Prepare income and expenditure for the year ended on 31st March 2018 and also show balance sheet as on that date. Let's solve this question step by step. We'll prepare 1. Income and expenditure account. 2. Balance sheet as on 31st March 2018. Step 1. Understand the question. We are given a receipts and payments account, cash-based. Additional information to convert it into income and expenditure account, accrual-based. Then we'll prepare the balance sheet. Receipts and payments summary. Total receipts 70,800 rupees. Total payments 70,800 rupees. Step 2. Adjustments for income and expenditure account, accrual basis. We now convert cash transactions into actual income expenses for the year. Income side. 1. Subscriptions received during the year is equal to 45,600 rupees. Add due at end 31st March 2018 is equal to 2,000 rupees. Less due at beginning 1st April 2017 is equal to 1,000 rupees. Actual income is equal to 45,600 plus 2,000 1,000 is equal to 46,600 rupees. 2 donations. Treated as income is equal to 11,600 rupees. 3 charity show income. Income is equal to 8,000 rupees. Less expenses is equal to 800 rupees. Net income is equal to 8,800 is equal to 7,200 rupees. Total income is equal to 46,600 rupees plus 11,600 rupees plus 7,200 rupees is equal to 65,400 rupees. Expenditure side. 1. Medicines consumed, use stock adjustment. Opening stock is equal to 8,000 rupees. Add purchases is equal to 24,000 rupees. Less closing stock is equal to 6,000 rupees. Consumed is equal to 8,000 plus 24,000. 6,000 is equal to 26,000 rupees. 2. Salaries is equal to 22,000 rupees. 3. Sundry expenses is equal to 400 rupees. 4. Honorarium is equal to 8,000 rupees. Total expenditure is equal to 26,000 rupees plus 22,000 rupees plus 400 rupees plus 8,000 rupees is equal to 56,400 rupees. Income and expenditure account for the year ended 31st March 2018. Expenditure amount, income amount. Medicines consumed 26,000. Subscriptions 46,600. Salaries 22,000. Donations 11,600. Sundry expenses 400. Charity show, net 7,200. Honorarium 8,000. Surplus, excess of income 9,000. Total 65,400. Total 65,400. Step 3. Prepare balance sheet as on 31st March 2018. Assets side. Assets. Cash bank balance 3,600. Subscription due 2,000. Stock of medicines 6,000. Equipment 12,000. Building, value given 72,000. Total 95,600. Liabilities side. Liabilities. Capital fund opening. Add surplus for year 9,000. Total 95,600. We need to find opening capital fund as of 1st April 2017. Opening balance sheet 1st April 2017. Assets. Cash is equal to 5,600 rupees. Subscription due is equal to 1,000 rupees. Stock of medicines is equal to 8,000 rupees. Building is equal to 80,000 rupees. Total is equal to 94,600. Liabilities. Opening capital fund is equal to 94,600 rupees. Final balance sheet as on 31st March 2018. Liabilities. Assets. Capital fund opening 94,600. Cash bank 3,600. Add surplus 9,000. Subscription due 2,000. 1,03,600. Stock of medicines 6,000. Equipment 12,000. Building 72,000. 95,600. The balance sheet matches. Easy memory trick. SHE to remember key expenses. S. Salaries. H. Honorarium. E. Equipment. E. Expenses, sundry plus medicines. Next important long question is 3. Hyderabad Sport Club prepared the following receipt and payments account for the year ended on 31st March 2018. Receipts are payments rupees. To balance 31,800 by staff salaries 3,70,000. To subscriptions 1,80,000 by printing and stationery 17,200. To sale of old items 65,000 by rates and taxes 15,000. To interest received 2,20,000 by purchase of land 20,000. To receipts from sports 90,200 by purchase of sports items 1 lakh. By other expenses 34,800. By balance CD 30,000. 5 lakhs 87,000 5 lakhs 87,000. Additional information. Particulars 31st March 2017. Hours 31st March 2018. Rupees. Subscription in arrears 20,000 30,000. Subscription received in advance 5,000 3,000. Furniture 20,000 18,000. Sports items 20,000 30,000. Prepare income and expenditure account and balance sheet for the above period. Goal. We need to prepare 1. Income and expenditure account for the year ended 31st March 2018. 2. Balance sheet as on 31st March 2018. Step 1. Understand the receipts and payments account. This is a cash-based summary of all money received and spent. We have to convert it to an accrual-based format, income and expenditure account, to find out true income and expenses for the year. Income side, receipts. Item amount. To balance BD 31,800, opening cash goes to balance sheet. To subscriptions 1,80,000. To sale of old items 65,000. To interest received 2,20,000. To receipts from sports 90,200. Payments side, expenses. Item amount. Staff salaries 3,70,000. Printing and stationery 17,200. Rates and taxes 15,000. Purchase of land 20,000. Capital item goes to balance sheet. Purchase of sports items 1 lakh. Asset goes to balance sheet. Other expenses 34,800. Balance CD 30,000. Closing cash goes to balance sheet. Step 2. Prepare income and expenditure account. Now we adjust cash items to find actual income expenses for 2017 to 18. Income side. 1. Subscriptions. Received is equal to 1,80,000 rupees. Add outstanding due at end is equal to 30,000 rupees. Less advance received for 2018 to 19 is equal to 3,000 rupees. Less last year's due already received is equal to 20,000 rupees. Actual subscription income is equal to 1,80,000 plus 30,000 20,000 3,000 is equal to 1,87,000 rupees. To interest received is equal to 2,20,000 rupees. 3 sports receipts is equal to 90,200 rupees. 4 sale of old items is equal to 65,000 rupees. Assume it as revenue unless told otherwise. Total income is equal to 1,87,000 rupees plus 2,20,000 rupees plus 90,200 rupees plus 65,000 rupees is equal to 5,62,200 rupees. Expenditure side. Staff salaries is equal to 3,70,000 rupees. Printing and stationery is equal to 17,200 rupees. Rates and taxes is equal to 15,000 rupees. Other expenses is equal to 34,800 rupees. Depreciation on furniture is equal to 2,000 rupees, from 20,000 rupee to 18,000 rupees. Note, purchase of sports items is an asset, but any old sports items lost are treated as depreciation. Sports items increased from 20,000 rupee to 30,000 rupees and 1 lakh rupees was purchased, so depreciation loss is equal to 20,000 rupees plus 1,30,000 is equal to 90,000 rupees. Total expenditure is equal to 3,70,000 rupees plus 17,200 rupees plus 15,000 rupees plus 34,800 rupees plus 2,000 rupees plus 90,000 rupees is equal to 5,29,000 rupees. Income and expenditure account for the year ended 31st March 2018. Expenditure amount, income amount. Staff salaries 3,70,000, subscriptions 1,87,000. Printing and stationery 17,200, interest received 2,20,000. Rates and taxes 15,000, sports receipts 90,200. Other expenses 34,800, sale of old items 65,000. Depreciation on furniture 2,000. Depreciation loss on sports items 90,000. Surplus, excess of income 33,200. Total 5,62,200. Total 5,62,200. Step 3. Prepare balance sheet as on 31st March 2018. Liabilities. Liabilities. Subscription received in advance 3,000. Capital fund opening. Add surplus 33,200. Assets. Assets. Cash closing balance 30,000. Subscription due 30,000. Furniture 18,000. Sports items 30,000. Land 20,000. Total assets is equal to 1,28,000 rupees. So, capital fund is equal to total assets advance is equal to 1,28,000 rupees. 3,000 rupees is equal to 1,25,000 rupees after surplus. So, opening capital fund is equal to 1,25,000. 33,200 is equal to 91,800 rupees. Balance sheet as on 31st March 2018. Liabilities, assets. Subscription received in advance 3,000. Cash bank 30,000. Capital fund opening 91,800. Subscription due 30,000. Add surplus 33,200. Furniture 18,000. 1,28,000. Sports items 30,000. Land 20,000. Total assets 1,28,000. Easy formula to remember subscription income. Actual subscription income is equal to amount received plus due at end, due at start, advance for next year.